Waking up, fire in the soul, shots on the screen, taking full control. London session calling, the volume is high. Watching the candles, reaching for the sky.
Strategy locked, no room for doubt. I know what the movement is all about. From the one-step plan to the two-step challenge. Finding that edge, keeping the balance, no distractions. Phone or silent mode, deciphering the market, cracking the code. Precision entry, the setup is clean. Living the life inside the machine.
Patterns forming, packets closed.
Let's talk execution, let's talk speed. The crystal clarity is what we need. Some is action, just the price as I see it. If you dream of the top, then you gotta be it. Spreads are tight, the conditions are prime. Scaling up the ladder, one trade at a time. Global access, yeah, we worldwide. We're the brokerage back firm, right by your side. It's not a gamble, it's a calculated risk. Reviewing the data, checking the list. Green on the screen, yeah, the feeling is grand. The power of the market in the palm of your hand.
Master of the pulse, heart rate steady. When the window opens, I'm already ready. No revenge trading, no chasing the rat. Following the logic, the plan in my head. The market is a mirror, it shows who you are. Trading like a pro, reaching for a star. Seacrest is the vessel, the compass is true. Breaking every barrier, breaking on through. Discipline and patience, the tools of the trade. This is how a lasting legacy is made.
Chasing the sun from the east to the west. Put the strategy through the ultimate test. Sydney is waking while New York is sleeping. Watching the levels, the promise is keeping. Laptop open by the ocean shore. Every pip gained is an open door. No 9 to 5, no shackles, no change. Just the cold hard facts and the capital gains. From the rooftop bars to the quiet floor. Seacrest Markets gives you so much more.
Patterns forming, markets call. Balance-based drawdown, standing strong through it all. Seacrest Markets, leading the way. Making the move every single day. Charts in the vision, strategies align with every trade. Our future is defined. Charts in the vision, strategies align with every trade. Our future is defined.
Then the lights, let the candles glow. Watching the Fibonacci start to show. Resistance turning into support. This is the craft, this is the sport. Back tasting nights in the early mornings. Leading the trends and the volume warnings. It's a chess game played on a digital board. Striking the keys, striking the chord. Elite mentality, top tier tech. Seacrest provides the ultimate check. MT5 or match trader speed. Technology serving the traders' need. Daily limit set, max allocation. Building up capital, pure dedication. It's more than the payout, it's more than the gain. It's the freedom we build, breaking the chain.
From the first deposit to the maxed out account, watching the influence and impact mount. We're the new era, the elite of the screen. Navigating depths where the giants are seen. Seacrest the name, the gold standard in sight. Turning every vision into brilliant light.
It's a mindset,
Keep grinding,
it's a lifestyle.
keep crushing. We own the vision. We are the flow.
A very good morning and welcome to Seacrest Markets Live. Thursday, 5th of February 2026. And what a day it was yesterday. We saw huge unwinds across the markets to continue to the downside. We're seeing metals potentially finding their bottom, or are they dead cat bouncing? We're seeing Bitcoin undergo a crisis, which is it pretty much languishing around that 15-month low, wiping out all of those Trump trade gains from November. Interesting fact, over 740 million US dollars in leveraged long positions were liquidated in the last 24 hours from digital gold. Now, what we're seeing at the moment, we will talk about Bitcoin in greater detail, is the narrative is continuing to fail to attract the same dip buying previously seen. We obviously discussed the potential shorts yesterday during the live stream. So if you didn't get to see the live, head back and check out the recording from yesterday, which was the 4th of February. And you'll notice that towards the very end of that session, it's not time stamped, towards the very end of that live stream, we were discussing the breakdown in Bitcoin and how we're expecting continuations to the downside. So head over and check that out. But again, I will cover it on today's live stream anyway, as we cover typically, and we break down the US indices, gold, silver, DXY, covering the FX markets mainly. We'll get some requests maybe for some other crosses, yen crosses or Aussie euro crosses, etc. And then we tend to finish off the session with any Bitcoin related, crypto related instruments. And traditionally, we'll just answer questions and queries along the way. As per the email and announcement, it's purely a strategical decision to focus on the ever-growing CFD brokerage. And that was a decision made by the executive team. So that is exactly why the prop arm is winding down. Now, again, it's winding down, but pretty much no traders will be left without a solution. If they're in a challenge stage, all traders will be refunded their challenge fee amount. If they are in the funded stage and they have realized P&L, realized profit, they'll of course be receiving a payout if they're on the funded stage. So it's a strategical play to focus again on the ever-growing and ever-evolving CFD brokerage of Seacrest Markets. And that is why I continue to run and operate on the live streams to provide education, breakdowns, detailed analysis, and general commentary on what's going on and around the markets. So hopefully that answers your question, Board Weep. So yesterday, global markets were pretty tense. We saw stabilization continue from earlier in the week across hard assets, as well as this SaaS apocalypse. You can actually combine those two words, but there's no way I'm doing that, which obviously is within the software sector, so affecting indices. There's still a lot of panic and worry following Black Friday, which was the crash last week that we saw. Yeah, yesterday we discussed the market potentially trying to attempt to build off of that base to find its footing and trying to navigate that nomination of the new chair of the Fed, which is Kevin Walsh. So combined with all of that, we also have the partial US government shutdown, which again, markets are still looking for the whispers, the chatters, the noise, and trying to find information elsewhere from earnings reports, which again, Alphabet, etc., etc. But non-farm payrolls has been postponed for this month so far. Now, in terms of what we're seeing, and the reason I'm going to touch upon individual stocks is because it matters when it comes to the NASDAQ, the Dow, and the S&P. But if we look at the SaaS apocalypse, software stocks faced deratings yesterday. Anthropic's rollout of its co-work AI automation tool sparked fears that high-margin subscription models for legal data and tax software are obsolete. So the problem here is now what we're seeing is these companies in their own rights are going to win in certain fields, but now it's pretty much a race to who will be the most pivotal and the most supportive in longer term. Like if you look at Microsoft cloud demand reduced by about 1% on their previous earnings. So it's showing that potentially it's softening. Now, Microsoft would be realistically one of the ones that most people would consider to be in the race, to be within the top 5. But whilst the landscape really needs to figure that out, indices are being affected. Generally speaking, the S&P Global fell 11% yesterday. Thomson Reuters fell 16%, which was its biggest drop since the pandemic, which was COVID. Obviously, overall indices were pretty flat to negative. The NASDAQ was down, out of the 3 indices we're going to mention now, 1.43%. The Dow was down spot 34%, and the S&P 500 was down spot 84%. So overall, markets were, again, pretty unattractive. There was definitely a lot of opportunities to get short, and we discussed again those with a pullback in that previous move that we saw. Now, that was the big dip bearish down move, and we saw that kind of arcing nature, and I'll discuss that as we go down into the lower time frames in a moment. And the reason I'm pointing to my left is because that chart is to my left. So we'll discuss indices first. I'll then give you an overview on gold and how potentially we're looking at trying to identify whether it is the bottom or whether it's a dead cat bounce. And of course, we'll discuss specific levels across gold and silver. And then, of course, we can break down Bitcoin a bit later as well, again, languishing near its 15-month lows. Any questions, any queries you've got, please feel free to ask them throughout this live stream. I'm here to provide the support you require from Seacrest Markets, the education, the breakdowns, the analytical insights, and hopefully transfer a lot of my experience throughout my career across to all the traders that are listening, whether that be the live stream or the recording. Sorry. I really should turn notifications off during live streams. Just get too many. All right, so as always, we tend to try and look at the higher time frames first. The daily and the 4-hour aren't doing too much at the moment. But when you look at the daily and the 4-hour, you'll identify that realistically on the daily, we're bullish. We're currently struggling to maintain that 68.50, 68.60 area of support and demand. Now, we had that huge blowout top at around 7,000. And what we're seeing is a rollover into that level. As an uber bull, I'm still looking for opportunities to get long. I'm not actively getting long much at the moment in terms of my longer term portfolio. In my family's ETFs, my daughter's ETFs in their junior ISAs, their JISAs, of course, that's the caveat to my comment, because every single month we buy X amount of an ETF index fund. But that is primarily just to DCA and average into something that's passive for my younger daughters. But when it comes to single stocks right now, I'm managing portfolio really carefully and acutely, looking for opportunities, and overall just managing the overall risk across the policies, across the portfolio and specific stocks that we've got. When it comes to day trading, we can be a lot more nimble. We can be intraday, we can scalp, we can have a position trade over a couple of days, close out before the weekend so we don't get the weekend risk or the gap risk or the overnight risk that potentially we're seeing at the moment. But when you're looking at this daily level right now, other than trying to play an intraday play, the market is struggling to, one, push higher and create higher highs. And that's okay, because the market ranges at least 70% of the time. We're trading inside support/demand. Yes, we're failing to get that commitment to the upside. But when you go into the 4-hour chart, you'll actually identify that we're trading inside a range. So we'll go down to the 4-hour and you'll see that we're trading in a 4-hour. Now, obviously this chart is pretty messy. You want to clean these up before executing, but we use this one specifically for analysis. Now, this will contain all of the analysis and ideas and information that we've showed throughout these live streams since launching. You know, whether that be the shorts up here, whether that be the short here, or whether that be something that we will look and identify here. Now, there was a short here that we were speaking about yesterday, And right now we'll discuss price action where it is. But as we do so, we'll take a historical look back at yesterday's price action. And if any questions arise from the previous shorts or how to identify those shorts, because it seemed to catch a lot of people on the wrong side, be that experienced professionals that didn't see that move coming, to lesser experienced individuals that were trying to long around the $7,000 level. Now, the 7,000 level. Now, what you have to remember is, from a commentary standpoint, trading into 7,000 being the previous all-time high levels, you have to factor in that there's going to be a lot of volume sitting around there. Now, yes, you can start to preempt that break and get long, or you can wait for additional confirmations and confluences once that level's broke. Alternatively, you're taking into consideration that actually price could actually be looking to trade lower. Now, we identified it to be potentially a trade lower based on macro, micros, and technicals, because the micros are coming from individual company earnings, the macros are coming from your economic geopolitic policies, and then your technicals provide you with that overlaying confluence. Now, as a day trader, the majority of the time, you're either avoiding the news, trading the news, or fading the news. The best one out of all of those, realistically, is fading the news, second to avoiding the news, okay? So if you do have to trade because you feel like you need to trade, try not to trade the news unless you know stuff that we don't know. Alternatively, just stay out of it. Sit on your hands, let the news trade through, and realistically either wait for your edge or methodology to stack up post that news coming out, or alternatively look to fade that news if you believe your methodology, your edge based on your forward testing, your back testing, your statistics, and your overall analytics and risk metrics can facilitate that trade. So coming into the 4 hour, as discussed whilst we were looking at the daily, you can see that we are trading inside a specific range. The range realistically started at around the 13th of Jan, about the 7,000 level. We had that brief trade above that 7,000 level. Price failed to sustain higher prices. We traded back into demand. Now, following this sweep, this high was deemed weak. We expected this price, or the expected price, to trade higher, not necessarily for a sustained period. But once we've figured out that we're trading inside a range with higher lows, we're now looking at identifying where in this overall market can we get short from, where we can get long from. And because we're trading inside a range, you can get long or short from the extremes. So short from the extremes at the top, long from extremes at the low. Now, what you have to bear in mind is when trading in a range, both and most traditionally on a probabilistic basis, the low and the high are both weak. So we are trying to trade and essentially snipe the range. I'll come to your comments in a minute, Swing Cat Trades. There's no logic behind any of your comments because it's all driven from an emotional response. So bear with me. Let me break down the analysis and I'll comfortably, respectfully, and happily answer your questions or answer your claims. One thing to note now, obviously, where this high failed to take out this high, price could be expected to trade lower. So we could realistically look to trade this low because this high failed to take out, meaning this supply has been respected. Supply could be taking control, which could mean there is an expectation to trade lower. Now, if that is the case, then realistically, we're going to be opening up prices down in the 68.30 level. So anywhere between 68.39 opens it up. But what it doesn't necessarily mean is that we're going to trade lower than 6,800 at this moment in time. Now, the reason I say that is because this area is deemed strong. So we would or should expect to get a bounce in and around this area. Now, again, doesn't necessarily mean it's going to be a sustainable bounce. It could just be an area for longs to be liquidated, profits being taken from the shorts or general covering of people that are long. The way this is setting up, and I'll look at this on the lower time frame, the way this is setting up is most definitely a bearish pennant. So that is an expectation for prices to trade lower. So we'll go down into the M15. Let's go down into the 60-minute. We'll take it gradually down. So actually we can highlight and identify maybe some intraday positions on a mid time frame as well. So obviously on Tuesday, if you're American, we called those shorts from this level. And during yesterday's live stream, we were looking at the bounce from this play and trying to identify whether we would actually get from this buy to sell pivot, which was like this yesterday, and this was like this yesterday, which we'll touch upon in a minute, which was identifying this trading into this. We was expecting or looking to see if the pivot in price from this buy to sell pivot would cause us an area of supply that we could get short from, which, as you can see, later on, as we started to develop out into the session, it did give us that opportunity. Now, let me quickly switch to London to show you the exact times. So as we traded up throughout London lull into pre-New York, we traded into that area of supply around that 69.40 handle. And then, of course, from pre-New York, sold off to the downside. Now, inside here, there were a lot of opportunities to get short. You could have, in theory, taken a short from the 1 hour. Quite comfortably, you would have been short in and around 69.20s. Your stop would have been above 69.40, 69.50s, maybe even above the ATR 50, just to give you that room on market to breathe because of the way markets are. And you're trading from a decisional level within the middle of the leg rather than the extremes of the leg. Because we're trading in a range, you have to bear in mind that the better places to trade from are the extremes, be it the highs or the lows. The lesser yet still probable areas to trade from are in the middle. There is a saying, never diddle in the middle, I don't trade in the middle of a range. So you have to factor that in within the probability and opportunity cost of actually taking a trade in the middle of a range. However, obviously, as you can see, markets broke down. We then traded lower and took out this. This low was weak, okay? This low here was weak because we failed to take out this high. So we are expecting price and momentum to continue to the downside until it finds its floor, until it finds a significant point of demand within the discount that potentially investors, buyers believe and feel that is a satisfactory level to get long from. So after that break, obviously price continued to trade lower. Now we highlighted this area of the extreme here from Monday the 2nd of Feb, which is around 68.50s, which, as you can see, price came into. We've respected it. We did attempt to trade lower, which created a fake breakout or a fake break or an attempt at a fake break to the downside, which some will deem as a sweep or as some form of false move. Price reacted and respected that level and traded higher. Now, again, similar scenario. What we're seeing, and this will become ever apparent as we trade into the lower time frames from an analytical perspective, is we're trading very tight, okay? We're creating lower highs, and initially we're trying to create a lower low, but then following that, we're forming higher lows. Subsequently, this pattern is starting to become very tight. We're coming into the pennant of the wedge, and the expectations are multiple. There's 6 potential outcomes, right? So we can't necessarily directly call it until it happens. But the way this price action is trading, you are either going to get that continuation break to the downside, you'll get that fake break to the downside, continuation to the upside, and then we'll find demand. Of course, you could get the opposite, which is the clean break again, break, retest, continuation. They're the ones that most people will look for because they're not taking into consideration the 6 to 8 different scenarios. I've already given you 3 scenarios. You can increase that to 4 immediately by flipping that and inverting it to the downside, which is a complex break. A complex break is where we break one side, We then trade through that level and break up to the upside or the downside. We retest and continue in that direction. What that does is it traps sellers initially. People get short, the price moves higher, buyers continue, and vice versa. If it was the opposite side, buyers get trapped in their longs, price then flips, corrects to the downside, retests, shorts get involved, and then shorts will continue to languish on that move and basically foam at the mouth. There are further complexities with that. It can break both sides and then dilly-dally out of there. It can continue to trade in the range to the side, which then thus negates this pattern. Potentially, it means there are additional patterns you could consider because trend lines are subjective, right? Trend lines are a chart study formation that can be moved. So if you look here, I haven't actually drawn it to its preciseness, but if we actually go off of the wicks, now these wicks are only derived from the volume of the data feed that the broker of the CFD provider is providing. So it isn't necessarily 100% exact because other brokers will show different prices due to spreads. Other brokers will show different pricing due to liquidity feeds and data feeds. So there's no complete exact price unless all of the CFD brokers used a centralized liquidity exchange like the CME, for example, on the futures side. So we are ranging inside the S&P right now. Obviously, we are trying to identify the direction of that break. But as you move into the M15, you can see that really clearly. Obviously, supply is holding, demand is holding, lower highs, higher lows are being printed in the markets. We can refine this a little bit, and the reason we need to is because, of course, I haven't gone from the wicks, but you can see that we are trading inside that wedge. We have had an attempt to break to the downside. Price is currently retesting that, which is also retesting the point of control where we've got significant volume. So from here, depending on how we trade from here, we could actually get the continuations to go short. But if price fails to sustain that bearish PA, then we could just see price trade back up into the level, trade from the extremes. And as we develop out into the US session, we might actually get better liquidity, better volume to get involved. But it doesn't necessarily mean every day is a trading day, right? So there was trades yesterday. There was trades the day before. There was trades long the day before that. There are ample opportunities throughout the week to get in a position, whether that is long or short. Today, we may not get a trade. And as traders, you need to be reminded that we don't get paid for time and energy spent in front of the screens, waiting for our setups, waiting for our analysis and our methodology and our edge to come together. We don't get paid as traders to pass a challenge phase or an evaluation phase. We get paid for making the right decisions. And even then, the market can turn against us. So you have to be reminded again that trading, you have to be completely agnostic to price, completely detached from all emotions. If you haven't studied it, just go and study behavioral finance. Because if you can't take losing trades or losing a trading account, you are not geared up for trading. Okay? And all of this analysis is provided for educational purposes only, providing you with ideas to help you go and make your own informed decision. There is no signal services. There is no guide to promote active trading on your own account. This is only to provide analytical ideas, breakdowns, oversight, transfer of market experience. So, from a trade perspective, we can obviously take a look at the M5 because I'd like to break down yesterday's market action whilst this PA develops out. So they're the trades that we broke down yesterday during the live stream, which you can see. And then let's actually take a look at the way this market forms. So here's the first kind of structure break that we look at, which is here. Now, the expectation would be for price to come back into this area and see if price actually respects it, which from my peripheral view, I can see that it doesn't. Give me a second. I just want to lay that over there. So the expectation is to see if price will respect this level. We've come in, we've respected, very light reaction, no significant continuation, so you wouldn't have got filled if you're looking for further confirmation. Price then trades up, trades higher. We then sweep this high. So we can get rid of that. We're now looking at where the next point of demand is for us to actually consider getting long or short from. Same scenario here that is here. So we can pretty much, that sweeps, we trade lower, we trade into this, we come in, we trade and we sweep. From here, we do the same. Let's see if at the extreme point of supply, we get supply respect, which we do. Supply gets respected. So in theory, from this area, we can start looking for additional confirmations and confluences to get short. So price rejects, we get a big bearish Marabuso engulfing candle that closes underneath our confirmation level. We have a doji prior, which again doesn't necessarily signify or signal that we're going short. It could just be an indecision candle. We need to wait for further price action to identify maybe the direction that it wants to go in. Now we get the confirmation to be short. Initially, you're going to always be looking for a 1-to-1 if you're looking at a fixed RR based on momentum, structure, overall order flow on that front leg. So you've got your 1-to-1 about here. I'm just looking at what time this was. So this was actually post US Open. So US Open was here. We fake break, moved to the upside. We then pivoted and traded to the downside. And of course, we then continued with that momentum. So your 1-to-1 is here about 4:30. So 4:30 European markets and your UK markets are closed. We only have the US markets. Now we're trading US indices, so that's okay. Volume will still be present in the market. CFD brokers, you can, of course, continue to hold your positions overnight throughout the weekend. You can swing trade, day trade, scalp, any strategy, any edge, any methodology. You just need to bear in mind, depending on the day, what swap charges are going to be applied. And then, of course, as we trade into rollover throughout Asia, your spreads will realistically increase due to the thinning of liquidity. But overall, there's no strategy constraints or contingencies that you have to fall for. From a prop firm perspective, most prop firms will have rules, so you just got to bear those in mind. If you're trading futures, most of them want you to close out later in the day. So 4:30 p.m. Central Time, they want you to start closing out of your positions ahead of the close. If you don't, they'll breach you, whether that's a soft breach or hard breach. Again, subjective to the firm you're talking about. But on a CFD broker, you don't have to worry about that. You can hold these positions for as little or as much R as you possibly want. And again, from a risk perspective, as long as you're sticking inside your margin requirements and you're not over leveraging from your, over leveraging, over risking from your own portfolio perspective, you can have your stops held wherever you want. You don't have to have stops. Up to you. It's up to you and your risk appetite. So you get that 1R. You get the 1.5R. We then trade into the extreme of the move. How you're managing this position is entirely up to you. But let's face it, 1.5R is probably the most you can take out of that trade, because you're not calling the bottom, and you wouldn't be able to scalp that low unless you're Superman or Superwoman. So yeah, nice trade. 1 to 1.5R was available yesterday during the day. Was there scalings? Yes, there was. Again, subject to your edge, subject to your methodology. You could get continuation patterns through your bearish flags, through your bearish pennants, through general break retest continuations. So there's a lot of ideas that could potentially form to create your edge. Now, don't overcomplicate things. Keep it simple. Look at structure, look at order flow, look at momentum, look at specific support, resistance, or supply demand levels. Either day trade, scalp, swing trade from those levels. You don't need to be looking at, your MACDs, your RSIs, your Ishimokus, your Heikinashis, your Bollinger Bands, your moving averages, your trend line. You don't have to put all of that on a chart. There are more people out there trading moving averages than you'd believe, and they make a killing. On an investment standpoint, I do use moving averages because it helps me to identify short, medium, long-term positioning. On a day trading perspective, I always just take into consideration where a certain EMA is. But overall, we're looking at the 3 key areas of volume, order flow, and generally looking at how market structure is playing out. Any confluences I'll overlay, but I don't ever reveal full discussions on edge because I don't teach my edge. I teach general edges and general discussions around markets. So as always, we've covered about half an hour of geopolitics, macros, and the S&P. So let's move across into shiny metals, which we'll discuss gold and silver, which are continuing to have a bad time. Whilst I do that, I'll just take a look at the comments to the right-hand side. It's interesting that people are calling me / the company a scam when all traders that have financially committed or purchased a challenge account are being refunded. If they are funded and haven't received a payout, they're getting a refund. And if they are funded and have realized profits, are getting a payout. That to me is good business practice. Every trader with an active account receives some form of remuneration in the methods I just mentioned above, be it a refund or a payout. It's a strategical decision to close down the prop operations of Seacrest Markets to focus on the ever-evolving, ever-growing CFD brokerage, which is licensed and regulated. That is a strategical decision. That is the point. Businesses are there for fair grounds. If a board decides from a strategical play they no longer need or want to have that business because they want to focus their attention elsewhere, that is a corporate decision. Exactly. If those traders who have paid for their accounts in the challenge stage were not getting a refund, and traders that are in a funded account that have realized profits were not getting a payout, I completely agree with some of these comments. But every trader who has a challenge account that is active will be receiving a refund. Every trader who is in a funded account who has realized profits will be getting a payout. And those traders in a funded account that have not received a payout that are active will be getting a refund. So I might wear glasses, which is a correct fact, but no one's being robbed. But you can, I've just got a comment on this. I can't trade anymore and I have to start all over again. That's a contradiction. In one part, you're saying you can't trade, and in the other part, you're saying you've got to start again. Well, if you've got to start again, that means you can trade. The problem is, for you, and that is a shame, and that is upsetting, it's that realistically you only had your accounts with Seacrest Markets on the prop side. And it was an upsetting day yesterday to announce that from a strategical decision, that we'll be closing down the prop firm. Again, doesn't make it any easier, be it a strategical play. We want to focus on the CFD brokerage. No decision is easy. All right, let's take a look at gold. Sorry, I got caught up in that comment. Let's go look to the 4 hour. Anthony, how are those Bitcoin shorts playing for you? Yeah, I bet. Cool. The gold looks like the S&P with these numbers. Give me 1 second. Let's move that. Sorry, I just had to close down some platforms because I noticed that with multiple platforms, managers, admins, there was causing some lag on my screen. So, I mean, we can't really call it much differently. You know, on the 4 hour yesterday, we identified this potential supply area sitting around 5,000 level that would attract price initially, where we'd get some form of reaction from. And throughout yesterday's trading day, we reacted from those levels and we continued to trade lower. So again, from an analytical perspective, we smashed it. So well done for all of those that were tuning into the live stream. You know, we called these levels and we called these moves ahead of time. I can do the maths, Anthony. Very nice position. Very nice. So obviously expectations at this moment in time, you know, we're seeing an inside bar yesterday. Well, so far this morning, sorry. We're seeing an inside bar so far this morning that's trying to see gold stage a recovery. Current 4 hour candle, again, similar inside bar. So we've had huge bearish impulses to the downside. We've then had a bullish inside bar followed by seemingly at the moment, even though it's got an hour and a half left, a bearish inside bar, which negates and creates indecision. There's no true direction to this last move, which, because we've got inside bars, as we go down into the lower time frame, you'll identify that we're trading inside a range, which, depending on how that pattern looks, we could, of course, then look for a play off of that pattern, which we will do. So let's go down into the 60-minute to start to break down the intricate PA that we're seeing. So supply is in control at the moment, right? Supply, we've taken out demand to the left. We've come back and respected this supply here. We've then traded lower, like so. And price is now retracing back into supply. Now, it doesn't necessarily mean that supply is going to hold. But if supply is truly in control, we can take into consideration that gap there. We'd be expecting price to retrace to around 49 3/4, so about 49.75, okay? From there, we could potentially look for shorts if we get confirmation that the market wants to go short. If we go lower onto the time frames, you'll actually identify that this is bullish at the moment, so demand is holding. So you'll see, whilst we haven't necessarily taken anything out to the left, this front leg, and this suggests that the market is weak, this front leg is bullish, okay? So this front leg, demand is being respected. So we'd be looking for price to now trade up into this level. And then from there, we'll be looking at identifying how we can get short. If we believe this pullback is going to be a sustainable move, we could wait to look for longs from around here. Okay, so we're not long yet. From a risk reward perspective, I don't like it necessarily. You could probably just about get your 1-to-1 if you really squeeze up that TP, which I said 49 3/4, which is 49.75. To get a 1-to-1 with a stop below this structural low, your price target has to be about 49.87s to 49.88s. So if your edge accommodates that move, then fine, that's an availability there. You know, we have resistance up at about 51.07. Like if you were just purely looking at a horizontal level as a resistance, 51.07 is the resistance, which is inside this level here. So 5107 is about here, where my crosshair is currently showing on the chart. So there is enough availability if we're trading in that. Now, obviously, to the downside from a support perspective, we've got 47.20 as our next support, which that is all the way down here. So that is actually lower than what we're trading. One thing to consider if we're looking at patterns is we are trading in a bearish flag or an equidistant channel. Okay, so we're trading in an equidistant channel. So our target actually aligns with the upper ascending trend line resistance at 49.83. We're currently sitting on demand. As you know, this can play out multiple ways. We could break, close, retest, continuation to the downside, and that is where we would start looking for shorts. That can play out. Okay, so if you look at the way this happened, is how did this range form? Well, it formed from a bearish leg. Now, what do we say traditionally? If a bearish leg formed time frame, do you know what I read that as originally, Anthony? What is this? This time frame's on the M15, so really low time frame. So what do we discuss about bearish patterns? If we're in a bearish pattern, the expectation for price is to continue in the direction of the entrance of the range, right? So expectations on a bearish flag continuation pattern, which again, it's an ascending flag. The expectation is for price to continue to trade back down into 47.50s, okay? If we break lower. Now, this front leg demands holding, which is weak because we haven't actually taken any structural. Yeah, exactly. That's how it reads from a technical analyst perspective. Again, demand is holding on the lower time frames, but that doesn't necessarily mean it's strong because we haven't actually taken any structure out to the left. My view on this is we're trading from this supply at 49.60s at the moment. If we are continuing to trade inside this ascending flag bearish range, expectation is for price to continue to the downside, okay? So that's how we're looking at gold at the moment. There are, again, probable scenarios. We have to wait for the breaks, but you can trade from the extremes. If you believe gold is trading higher from here, then you can look to get long from this level at 48.77s with the expectation for price to be trading up into around 5,107, which is that previous area of resistance. If you're looking at this from a purely pattern perspective and you're not comfortable with where price is, sit on your hands. And the reason that is because you're either going to be looking to sell at the extreme of the range up around 49.83s when it hits that upper channel or the ascending trend line, which means if you wanted to and you're feeling a little bit risky, you could get long from here. Alternatively, you'll be waiting to see the break of this move to trade lower. Nothing's wrong. It doesn't matter whether you're wrong or you're right, as long as you make money. Now, if you get long from the extreme and trade into one-to-one, fine. If you're waiting to get short, not a problem. If you believe you can wait for further confluences to get long because we're trading and targeting 5107s, not an issue whatsoever. But that is how the M15 currently shows us. But bear in mind, the lower the time frame, the lesser the weighting on the overall trend. You want to get your weightings from your higher time frame. So where is, for example, not the 2,410 minute, but the 240, which is the 4-hour time frame? Where's the 4-hour? You know, where's the daily? That's realistically where you want to be looking from. As per earlier discussions, breakdowns earlier in the week, the expectations were for price to trade into about that 4,500 handle, which is areas of demand support, and to get long from those levels. They were the realistic levels that we'd like to get long from. So all we're doing right now is pulling back on the daily from a previous area. bearing in mind we're still cautiously bullish on gold. So intraday timeframes, you will find there's a lot more noise, potentially a lot more plays. Doesn't necessarily mean those plays are highly probable, but it does mean that you could take advantage of intraday moves if they present themselves. Does anyone want me to look at silver? Again, silver's going to be realistically in line with gold, you know, no major differences. Again, somewhat reactionary from this 79 handle that we called out earlier in the week. Hasn't necessarily had that bigger reaction like gold has, which if you look at today's candle, it's taken a more significant beating to the downside than gold has at the moment. Now, gold and silver are highly correlated. So if silver is the front runner on this particular move, then the expectation is for lower prices in gold. And if there is some form of disparity or divergence between gold and silver prices right now, you need to find the mean. I.e., if gold is long and silver is short, which one's wrong? And how do we exploit that move? Let's look at Bitcoin. Let's give it a bit more time today on Bitcoin. In terms of Bitcoin, still currently bearish. My initial analysis overnight was to see if we could break 72,000, which we're now trading at 71.4s. The problem is obviously I'm massively long Bitcoin. But I don't see any structural levels now until 63,000, which is here. So for those of you that are short, like Anthony at 10 lots, that's a big move to the downside. Obviously, we can see that we're continuing to be bearish. Let's move down to the lower time frames because I discussed the potential megaphone pattern that we were discussing yesterday, and we discussed shorts in Bitcoin actively on that live stream, which you can see here. I mean, just a question, and I'd love your answers, and I'll wait for your answers. Does the analysis get any better than this? We called these shorts during yesterday's live stream. At the time, and we called them in and around this level here, okay? So between 9 a.m. UK GMT to 10 a.m. UK GMT, which was there. We called the move here. Price then failed. We've retested, we've continued, we've retested. If you were short, you could have added to your shorts in and around here. Now, from there, up to you how you manage your RR, your risk, etc. But, you know, just breaking it down, you've got your 1R, you have your 1.5R, and then the absolute R to the low, which you wouldn't have sniped, is just over 4.5R. And that actually brings us into the break and the retest of that previous descending trend line, which forms part of that higher time frame pattern that I was referring to. Now, again, from a technical standpoint, the analysis that you draw on your charts isn't an exact science. Volumes, prices can trade in and out those levels, subject to data feeds, etc., etc., etc. So right now we've had a break, retest into that level, and it doesn't necessarily look, you know, too damning at the moment. It actually looks like we want to see some form of recovery being staged in Bitcoin. So again, I'd like to see how this pans out. The way this is looking at the moment is, again, we've got a very similar pattern panning out like this. Again, higher highs are being printed, lower highs, higher lows are being printed, and higher highs are being printed. So we're starting to create an ascending bullish range. The way this pattern is structured is actually bearish, okay? But again, whilst we're trading in the range, you can snipe the extremes, be it the sells or the longs, or the longs or the shorts, sorry, or you can wait. Now, if I was looking to get short from around this low, which, you know, I'm not really looking to at this moment in time, I'd be waiting for price to come into about 72,000 to get short at this moment. If we start breaking down from here, you know, looking to sell off from this level because we're trading off of the extreme of that ascending trend line resistance, I could then adapt my view to add and look for shorts maybe in at around 70,000, 70,800, for example. So you always need to be open and adaptive to market conditions. When you need to be neutral, be neutral. When you need to be bearish, get bearish. When you need to be bullish, get bullish. There is no major decision that you need to take or make at any one time. Markets will remain irrational longer than you can stay solvent, just as they will remain volatile. If you're short, then I've got nothing to say other than well done. If you got short off of any of the analysis or the ideas that we were providing from an educational standpoint, then congratulations, you've capitalized on one hell of a move. You know, from 76,000 give or take to 75,600, all the way down to somewhere in the region of 71,000 to 70,000. I think that's an incredible trade. And if it was off the back of my ideas, then please feel free to send me a bank wire for 50% of the P&L. I have previous resistance around 70,000, which is my target, and looking to flip long at. Wait, what? I have previous resistance at 70,000, which is my target, and looking to flip long at. Oh, okay. Let's look at the weekly. I mean, similar patterns all the time, right? You're not trading the pattern. You're identifying patterns, and you're trading using confluence off of those patterns. Utilizing just the pattern itself is low probability. From a day trader's perspective, or a general trader, or even a position trader, actually, like from my investment portfolio, I still look at volume. When I'm getting in, I always want to see on my screener will only show certain stocks if there's been a subsequent increase in volume. So it doesn't matter if they show up on my screener. If they don't have the right volume, X percentage above, blah, 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 then I don't take it. So anyway, okay, so 70,000 previous resistance. Yep, I can see that. Which is, again, that's a big, that 70,000 level was always pretty much a big level, right? So 69,000, 70,000 is pretty much around thereabouts. Don't they call that Black Crow, free Black Crows, or free soldiers? There's 4 soldiers, there's 3 soldiers. You've got to, like, from a trading perspective, right? Look, impulse, correction, impulse. What's the expectation now? Correction. Not necessarily on this candle, but developing out. Again, impulse, correction, correction. Meh. Mediocre impulse, reversal, correction, right? Same here. Everything, even on a fractal time frame, go lower. Impulse, correction, impulse, correction, impulse, correction, impulse, correction, impulse, correction, impulse, rollover, impulse, correction. Markets can be very simple or very complex. You decide. But yeah, I mean, earlier in the year, we were discussing how if the bullish momentum in Bitcoin could continue based on previous timelines, time spans, expectations of price on forecasted abilities, we were looking at about 132,000 to be reached by the 8th of June 2026. Now, obviously, since that idea has come, we've actually traded lower. So we've pretty much pulled that idea. So we can't necessarily factor that in at the moment. We need to obviously draw the conclusions from lower prices. Once we base, we can then, of course, potentially forecast and identify where that is. Now, that initial forecast was put out on the 12th of January, as you can see per the chart in front of you. So yeah, I'm going to be interested to see where we can play out on this, because obviously we've got a lot of opportunities. A lot of opportunities to come. I think. What does everyone think about Alphabet's earnings, as well as the reports from Amazon and Apple? Do we think that AI will continue to face skepticism, which obviously is kind of on the back of Microsoft and AMD soft guidance? Do we expect de-risking even further going into Friday, where we see investors get out of Bitcoin, get out of the indices, get out of single stocks, and put their capital into cash? Do we see that happening? Like, what are your thoughts over the next couple of trading days, maybe trading weeks? Yeah, similar scenario. Obviously, expectations realistically will drift lower, then correct, and that's when you'll start to see the same moves play out, where individuals are getting long from the wrong areas at the tops, which then pushes market short, getting short from the wrong areas because of an overextended move, because they're believing all of the hype across social media. Mid-end February we kick off again. Yeah. All right. So listen, everyone, thank you for the comments, queries, whether they're positive, negative. I'm always here to provide you with education, analysis, market breakdowns, macro, micro, technical, to answer all of your questions, your qualms, your queries, and just try to transfer a lot of my many years experience across to all of you. For those of you that are interacting, appreciate all of the comments, the questions, and the general two-way commentary and chit chat, so do appreciate it. If you are watching, whether that be the live stream or the recording, please obviously like, subscribe, turn on notifications. I'm here Monday through Friday every single day, breaking down the markets as you see fit. If there are any instruments or assets that you do want me to trade or cover or break down for you during these live streams, please just drop a comment, or whether that be on the recordings or whether that be during the live stream, just send in the message. But thank you for your support. If you are trading today, as I always say, trade safe, trade smart, trade Seacrest, and I'll see you same time tomorrow. But have a great trading day, and I'll see you then.
Patterns emerging, psychology's key. Discipline strong, no greed in the spree. Risk managed tight, emotions in check.